Okay. Hi guys. Just one moment there, guys. Hey, how are you guys? Sorry, I was just updating. Anyone that got short. Whoops. Go away. That anyone got short in the Dow? Just updating that stop. Happy just to move the break even just to see if that can plow through. It's just got through these lows, and we're looking for a partial around 30. I want to see that, but that's sort of getting into the MAs. It might be getting a bit stretched, so I'd rather just tighten the stop so we're not going to lose anything now and just see how it goes. Absolutely kicking myself on the Hang Seng. I was watching that, waiting for a pullback, waiting, nothing. Hey, how you going there? It's NWR. Hope you're well. Yeah, so these are the action for today. There's a bit of action. So today, what I'm seeing is weakness on crude oil. So, I mean, the problem with that, most of the action kicks off late in the session. I mean, not late, not really in our session. It's nifty. No worries. I'll call you Fred for now. All right, so we got most of the action on crude will be kicking off later on. It's not, and that's what makes it hard to get short. I was looking at a short at 40.20 today, and it's gone through there. Say with a stop at 40.56, but you sort of know as it creeps down, it'll get people and get people short, turn around, whip them out, come into either the European session or the US session, just to chop people out before it starts heading short. So it's a tough one to trade without a big stop, I think, now. In the Asian session, because it's not it's not a massive moving. Once in the Asian session, once the European kicks off at 4 to 5, 4 o'clock for the futures and 5 o'clock, and then the European session really kicks in at 5, all the indices open, then that might see some more action. I just don't want to get caught with this support through here at 40, and it's held a lot above 40. Get caught with a short on and turn around and squeezed out. I mean, we've had had a long on this, and sorry I didn't alert anyone to it. We had this big sell-off to 58.18, which we mentioned in the alert. I mean, you could have got short once you got this sort of green candle, you got this pop-up, open down, gap down, and then it was just starting to hold. You can drop it down a time frame. You could have got short there, but I didn't really see any strong entry that I wanted to jump into on the short side. Did bounce off 58.18, bounced up, and you can see it starting to hold through here. When it was starting to do that, especially on the 5-minute time frame, it was starting to get a bit of oomph, and you're looking for potential gap close or just to squeeze out any short sellers that come in on the on the open. That makes sense. So it was long through here, but it was on a different product. It's equivalent to going long through here for about, I think, 15 points, just back into that gap close. And it kept going a bit higher. It looks like it could be running out of steam when you look at the Hang Seng getting sold off. That was really, this is off a 1-minute chart. So what I like to do is watch the 5-minute chart for an entry short. The biggest problem, the only real thing, my phone won't stop beeping at me. I didn't see what I'd like to have seen. I didn't really want to take it short through here because for me, the stops are going to be at a clear level, not just above the candle, and even above that candle. Say you went short below this green candle here. So you've got the action that we're looking at. Let me just make it a bit bigger so it's a bit clearer. So this was the action. Was that the open? So that was just that it's the open there. You've got this action here, the weakness coming in, bouncing around. It was really showing some weakness up until this stage. You don't know whether it was going to contract in and break up. I was actually looking for a potential long at this stage. I wanted to see that hold up. As soon as it broke into the downside, then you know that short's going to be in play. And anyone that's been selling up here is on the right side of the market. Anyone that's been buying off, this higher lows is going to get caught. And so that's what we're looking for, that squeeze out. I didn't want to break to sell, to send an alert to sell on that break there. It was at 24, say 465. Your stop would have had to been, 50, 60, 70 points. I'm not too happy with the 70-point stop in the Hang Seng because it can move. It can turn around, whip that out, and go back in. I'd rather not have a stop just below the 5-minute candle. I like to follow it down that way, but I'd like to have something where, you got some weakness there. You might have a bit of a bounce, a green candle here, and then another red candle and take out the low. That means it means you can really narrow in your stops, and really tighten up your stops I like it around the 40 mark on the Hang Seng at the moment, where we're keeping ourselves out of danger. And to have a stop, the entry here and then the stop above, it would have worked out fine. You've got to move down to this support at 24.3. And what would that mean? That was probably about 100 points or so. 100 points, just over 100 points in that move down, which is, in hindsight works great, but you don't really want to trade. You're not trading in hindsight anyway. So that's ideally what I was looking for. That rollover there just didn't play out. We could have got quite a aggressive entry. When you look at it, was coming to that support through there, which was from, was it early hours Saturday morning? We got this little spike up into the close. So it just come down into that support, bounced and went straight through. So it just took it out. So I'd want to see from here a deeper correction back up. The problem is it's coming on 1 o'clock. So generally from 1 till, before 1, the market's picked its direction on the Hang Seng at least. There was an entry, if we just go into the 1-minute chart, potentially here. It bounced off here. If you could have got pretty aggressive, that first 1-minute candle took out the last 3 or 4 minutes, took out the lows. Could have had you stop just above, and it turned out all right. But generally, again, I don't like to trade exactly like that. I'm still going with the trend. I'd rather see, pull back to these MAs and then go short when it's holding that yellow MA. That means anything to you. But that's the way I'll be looking at it with this little grind back up. It was more of just, continuation, but it was a tough one. It was a really tough one to get short on. So we'll see what the Hang Seng does. The Nikkei, I was actually looking this morning for potential that level to hold, which is what, 2200 even to hold, but they had some numbers out. I think some manufacturing numbers that turned out a lot better than expected, which sent it rocketing at 11:30, 10:30, 10:30. It took off. Was that right? Yeah, 10:30. So good numbers triggered those buying, and it's been sort of relatively bullish now. You can see the MA starting to roll. It could be running out of steam here, so it might get a bit choppy around this level, just below that 22,296. But we'll see how it goes. Oh, there you go. We're probably just about out of this, which is a shame. So if you didn't manage to take a partial on that, which I didn't, we've probably just been stopped out. I'll just see. Well, maybe in by a few points. If it drops from here, I'll be happy as Larry. If we can take out that, it's got to take out this low and get down to back down to the sort of 30. If we take out this low here on the Dow, or these couple of lows, then it's good. Don't be surprised if we get stopped out. It's only a few points away from being stopped. So anyway, that's the action. So we've got today. I'm just going to go through a few of the key major charts that I'm looking at in the overall market, because I think there's, whether or not there's weakness creeping in, we'll have to wait and see. But it looks like there's a lot of markets that are starting to either, the uptrend is starting to be broken, and we're starting to find some either consolidation, or we're going to go into a bit of a pullback. But you don't want to be diving into some sort of minor break here, because if it's going to go, it's going to go hard, and you've got lots of time to jump into it. Okay, so we really need to be on top of our game and in respect to what's happening with the overall market, what's happening with the indices. You got copper sold off on Friday. Oil looks to be showing some weakness. So let's just get into those key markets. Let's see, Hang Seng. Let's know about that at the moment. So the S&P, really, to me, they're just getting supported by tech at this stage. The big S&P, what does it make up? 20 to 25% of the S&P. That's a massive, considering there's about 5 stocks out of the 500 making up 20-something percent. So it gets a bit of a run on when the tech stocks, and they had their reporting after hours on Thursday, and that it was going to open them and find at least some sort of buying on the Friday once the US was open for trade at 11:30 p.m. That's Sydney time anyway. So you're going to be wary of that. It's just that FOMO, the fear of missing out for a lot of people have been watching this and they might be diving in, going, they're super strong. You know, it's a bubble. The way I see it, it's a massive bubble. And whether you're going to get the Nasdaq starting to crumble here or starting to continue on, we don't know. I mean, it's a tough one. You know that there's a bubble, but you don't know when it's going to burst. Is it in essence, and it could just keep going for a while. If they're the only tech stocks, they're the ones with major momentum. They're the tech stocks at the moment. The only ones really to trade, then people just trade them. Don't care if it's going higher. Don't care what the fundamentals are. Fundamentals might be good. It might have been extended a year ago. Doesn't matter if it's still going up. So that's sort of the way I'm viewing the Nasdaq and the US, getting supported by the Nasdaq. Now, if they start to find that they've all reported, we're looking ahead to the next quarter. People might start to book in some gains if we show some cracks. So it's really a matter of what's going to happen. So let's look at the Nasdaq. Let me just clear out. I'll clear out this chart and we'll start from scratch just to get a bit of an idea of what's could be going on. Let's go down to a daily. So we see sell-off, smash through those highs. Basically that's not even a V-shaped recovery. That's a V-shaped something. It's not really a recovery. It's just gone clawing straight through those highs on your daily charts. So we start picking out the key levels on the daily. Look, there's one here on the Nasdaq at this stage. We've got the highs potentially put in place up here, but that could be broken the next couple of days. We could just grind straight back up. The fact that we've rolled on the MAs is what I'm sort of watching at this stage. This trend, if this is the trend we're picking, it's still up. It's still holding. We've got touches, so many touches. 1, 2, 3, 4, 5, 6 touches on that support line. That hasn't broke it, which means the trends are still up, which means this is a key support at the moment at 10,364. We're about 600 points off that. So more than enough room to be chopping around here and hold that trend on the Nasdaq. But I mean, if it comes screaming down, that'll blast straight through that because everyone that's been loaded long, not just in this bounce, but for a long time, might be thinking twice about holding. And again, when the market goes into fear-driven sell mode, then it doesn't matter about the fundamentals. Fundamentals can only really give you an idea of whether it's undervalued, overvalued, or whatever, but it won't tell you where it's going to, and it won't tell you how much people are getting nervous, or how much FOMO is kicking into a market. I mean, it could have been well overvalued down here, for example, back up into the highs. These might have been overvalued here, might have been fair value right down here. We don't know, and I don't know anything about it, but it's just looking at sentiment, and at the moment the sentiment is so bullish in the Nasdaq, it's not funny. And I think that's pretty much what's holding the US up at this stage. Now, there was talk on the weekend, I don't know if anyone saw that, someone in the Fed Reserve, I don't know what Fed Reserve he is, but I think he sits on the board for the US Fed Reserve, talking about potential lockdowns. Wouldn't be surprised if they go into lockdown. So I'm just checking out something here. Where is it? I've gone. That's great. Let me just check with it. Is that it? Oh, we're hanging in there, guys. We are still hanging in there. See if this can roll over. It would be great. So I'm just looking at the Dow. All right. So yeah, Fed Reserve talking about the US going to lockdown. Let's just get it out of the way because they're not under control whatsoever. I mean, we thought Melbourne's getting out of hand. Their numbers are phenomenal compared to Australia. Even in percentage terms, I think they dwarf us. So maybe those rumblings are starting about getting back into lockdown. There was is still news of companies going bankrupt. Now, that was his view, whereas if you let this stretch out and it's just struggling, there's companies going to go bankrupt because they can't keep going with minimal funding if you just leave everything open thinking it's going to be great. So if they go into lockdown, the Federal Reserve can go more stimulus, just lob in more stimulus, get it over and done with. And then there'll be a lot less companies going to lockdown. And if they come out the other end and they can bounce back quickly, that's what people want to see. But at the moment, when there's not going to be a quick recovery in the US at all, even more contraction on the cards if they don't get it under control, which is their biggest concern at the moment. So looking at the S&P, yeah, it's still on an uptrend. It's potentially, this is sort of the levels we've been following for a while now. On the daily, it's still grinding up. You've got key highs, well, all-time highs up here. It's probably looks set to want to go through it. We'll wait and see. The anchor to that trend really, well, you can probably move that up a bit actually, is up a bit tad higher. I'd say it's up here at about 32.09. So if it starts to break down, that's only, well, it's a few points off. Yeah, it's about 60 points off on the S&P, which, things get moving, it can go down quite easily. But if it starts to plow through that, then yeah, I think there's going to be some problems. Problem is, it looks like it is definitely holding. We've had this contraction here, held, rallied. Contraction here, same sort of thing, but on a smaller scale, double bottom. It looks like it's going to go through the top and start to trade up to the all-time highs. If we're so close, expect it to break into all-time highs and maybe start to roll over. Don't know. I don't believe that the market should be up here. Getting, like I said, supported by 5 stocks or so. So if you look at other key markets, let's just go on to gold. Had a bit of a pop today and has given that straight back up again. Let's just go into the lower time frame, look at the 30. Look at that. That was the open this morning. Flush out the highs, straight back down again. So whether that's preparing, consolidate here, it's got to consolidate above that 1960. If it can consolidate here and have another run at the highs, fine. I mean, we're all over, but the US dollar bounced really for the first time. We've spoken about this, that 92.50 level on the index. Let's just look at that then. We'll be jumping around a bit here, guys, sorry. This 92.50 zone that we spoke about, which is really support coming in, just that rising support. There was no real solid support through there. It's traded, if you could say, back. It's kind of a broad area. It's traded a few times, bounced up, reacted off, went through, come back, retested just above, retested. It's come back into that zone now. So whether we're going to react back off that zone, who knows? But at the moment, it was really the first bounce or bounce of some sort that we've had. Look at that move into the zone, straight back out. So whether it starts getting supported and we have a decent correction, just to squeeze out a lot of these shorts. There is so many shorts built up, and there's so many longs on the euro and the Aussie and pound. Everyone's basically pointing one direction on those. So if we get a good squeeze on the dollar index, on the US dollar, then they're going to get squeezed in reverse. And that's what's going to put pressure on your commodities, anything that's been going linked to that. That's why I'm sort of expecting maybe gold, if we do get, and it's all linked to this US dollar, if we get a bounce in US dollar, a good bounce tonight, continuation tonight through Europe and that, then gold, I would expect to squeeze out some of these buyers on a move down. And the same, euro, look at the move on the euro, was pretty much up, straight back down again at the exact same time which the dollar turned. We've got Aussie, which is a bit more contained. They're all, back to the euro, it's still holding a trend up. This is a bit more messy on the euro, but it's got to break through, was it 117.30, thereabouts, 40 or 50 pips away from here. If we start trading through that zone, then yeah, we could get a bigger squeeze, because anyone that's long, if you're long from, you're up 100 points or 100 pips or so, then you can easily give it some room to move. You don't have to worry too much. All right, so that's the thing. You know that you're up at resistance, but you're willing to give it some wider risk, because there could be some more. If that US dollar goes back into meltdown again, then there's more upside to come on the euro. So I think that's why a lot of people are playing it. It hasn't really traded down through any key levels to put any longer term longs under pressure. Maybe just the short ones. Anyone that's bought it up here has been squeezed out. That's fine. But anyone that's from there on and before, that's bought it right up in this rally here, anywhere in these sort of continuation spots, then they haven't been put under pressure just yet. You might want to tighten your stop up, and I would suggest that a lot of people might have their stops just under this level here, which is around 117.30. If it trades through that and we get a bit of a bounce to get a lower high, then yeah, it could take a deeper correction lower. You have to open a brokerage account to use this platform. This is not on TradingView, but the other one we've got, which is, I'm going to find it again now. No, I've got the wrong one. Here we go. That was it. On this one, this is just the TradeDirect 365 platform. So CFD platform, that's the one so we use for a lot of our stuff. So yeah, take a look at that. Still in there. Look at that. Let's just see if we can. We probably hung in by about 3 points, I reckon, on that. Let's see if they can hang in and can get through that. It's starting to head south again. Anyway, so that's the euro, and basically the currencies are linked to that move on the dollar. Look at that. That's a big move on the yen as well. Big pop on the yen. It's just a squeeze. So at the moment, we don't know if that's a squeeze taking out some of these shorts. The same on the US dollar, same on the euro, same on potentially the Aussie. If it's just a squeeze and then it's going to turn around and continue its way in the same direction as the US dollar heads south, or are we going to get some more, a bigger squeeze than that, just to squeeze out some of these, traders? So that, to me, that would work in with more of a bit of a decent drop, a decent correction on, say, the Nasdaq, the Dow, and the S&P. You can see if you go and look at the DAX. I want to go back to a daily chart. I think on this one, that's what I was looking at. It's a bit of a breakdown. I mean, whether that's your level there, well, that's it. You're breaking down on the DAX. And that's not the best of signs, because that's sort of the first time we've had a punch up there, pull back to the MAs. You started holding some support in here. That's great. You didn't even get anywhere near those lows, didn't get near here. And then we just kept going up, got up towards the highs, and we're starting to fail now. Whether or not we're going to get a deeper correction, or we just go sideways, consolidate, and up we go. And then we have to sort of, then you go having to move your support zone because it's holding. So if it pops up here, what I'll be looking for on the DAX is I want to see a deeper correction, and that's pretty much on most of these indices, and I don't want to see it creep up. Okay, that's sort of the price action I'll be looking for, and I'll show you in the ASX as well. But when it breaks down, I want to see a deeper correction because there's a lot of longs built up on the long side here after this bounce. So they've been sold off, complete carnage on the way down. It's been grinding on the way back up a lot deeper than I thought to get back up to these highs. We're not far off the highs, the all-time highs in the DAX. A lot deeper than I thought, and it's all stimulus driven. So they've still got some issues. There's still global issues, still unemployment issues. So I would expect, if it's going to melt down, I want to see a deeper correction. I don't just want to see it stop here and then grind up and chop around. Then I would expect more sideways action. But the indication of fear is when you get that deeper correction off here, straight off the highs, no mucking around, straight down. And then if we can get, a couple of legs up, push up, minor pullback, another push up, then I'll be looking for a short or a shoulder to trade off a lower high to get on the short side. But I don't want to see a push back up to these highs. You want to see sort of 50, 1/3 to 2/3 of this move down, retracement. Ideally, if it's 50% of this leg down that I'm talking about. Whoops, that's not what I'm talking about there. So that's a leg down. I don't want to see more than, say, 50%. You would rather see 1/3, because then if it grinds around to the bottom third of that move down, there's a lot more. That to me would mean a stronger move down, and potentially it could open up something right down to these lows all through. All right. So that's what I'll be looking for there. You look at FTSE, same sort of thing, starting to potentially break down. Now that doesn't go hand in hand with what's happening on the Nasdaq, but it could. Okay, Jason, could ideally go hand in hand with what's happening on the ASX, the DAX, the S&P and the Dow. They're getting, probably the Dow's one to look at. If we start to break down on the Dow, which potentially it could be like we were just mentioning before, then that is all adding up to a bigger correction. Whereas, the S&P is getting soaked up because it's got the Nasdaq components. Actually, what's in the Dow? Anyway, I like looking at the Dow to see if that's going to break down too. There's a lot less stocks in there, so it's a good indication. So that's DAX UK we've gone through. Now, XJO, any Aussie traders out there, that's starting to break down. I'm not a big fan of what's happening here. Probably better to go over to that's the XJO there. One on a 30-minute there. Just go to a daily. See, it's just started to break down. I mean, it doesn't mean it's going to. It could mean it bounces off the MAs, goes straight back up through the highs. Anything can happen. But when you've got unemployment, we've got further lockdowns. Melbourne's just gone to stage 4, where I'm in stage 3. You got apparently Sydney, New South Wales is to follow. They're going down the same route. They're just a bit further behind. Other states, I can't see how other states can just get out so easily when it's rampant. It's getting rampant in Melbourne and Sydney. People are always crossing borders. contamination. There's a lot of people that will be walking around with the virus without knowing it because they haven't been tested. So um, I think with Australia the way they are, I wouldn't expect us to start taking out the highs. I know in the past that any negative news has been bullish for the markets, but when you start getting a bit stretched and unemployment goes back up, and we start to get companies come under pressure. It's only so long that the government can keep paying out and bailing out um, companies basically in Australia and the US as well before something has to happen. Something's going to give. So that's what I think the stock market might be looking at. So we'll just have to wait and see. Let's draw that up. Actually, let's just go back to, it's not much different. Yeah. So realistically, this is, the zone you're looking for is that to hold. Let's just get rid of that now. And then, if this level starts to break, I think that's where we've got a bit of a problem. We could just be pulling back, retest that zone around 57, bang, up we go again. It's a couple of 100 points away. The bears could be quite happy, with a move down of 100 points. They'll be kicking and screaming and saying everything's falling over, and then bang, straight back up again. Yep, the Mexicans. Any other platforms? Best to just send us an email. Send an email to support@tradesetup.com.au, and then we can just go and send you out a list of different platforms you have a look at, and just send us what you're looking at doing as well, what you're looking at trading, and I'll get back to you. So yeah, we've got this chopping around here, man. That could just consolidate sideways. So don't get caught up thinking we've broken down this inside level. This is a key level. Move up, pull back, consolidate. So it could do the same thing. Just look at what was going on here. Same thing here. Starting to come down. People are thinking it was bullish there. MA is going sideways, looking for that sell-off down here, and everyone's getting short, getting squeezed out. Same sort of thing. Everyone's getting short, could be, and then turn around and get squeezed out in a rally. Right. So what you ideally want to see is the same thing we're just talking about on the DAX. Ideally, this is what I'd like to see, because I think when you get this kind of price action, it jumps through there, takes out that zone. There's going to be a bit of bears. There's going to be people selling it through the break there, and then they turn around and get squeezed out, and you got this higher low coming into play. And I think that's what's going to drive people going, all right, that's probably about it. Let's jump in. We go long, and then if we start to get a move down again and then a shoulder, that's why I love the shoulders, because to me that's going to be, I've done a reverse candle there. That there is going to be confirmation that we've got a key lower high in place, and that there would, I think, is going to be the move that could take us down to 44, 4,500, straight below 5,000. Nothing's playing out yet. We could just be, like I said, chopping around here. We might come down a bit lower, and then that'll get all the bears excited and turn around and squeeze them straight back out again. Does that make sense? This kind of action, and we could be heading back up to the highs like we got the DAX, the S&P, the US, all that sort of stuff. So that it would be interesting to see how that plays. The last few things I want to touch on, anyone that Bitcoin got smacked around over the weekend, which is a shame for anyone that trades futures or CFDs. I don't know what platforms trade, how many trade CFDs over the weekend. But yeah, anyone that would have been holding the position on the weekend that can't get out, and all of a sudden gets smashed around and they get stopped out come the open today, then it was a bit of a shame. But that's the nature of cryptos. They can really move hard and fast, and there's a lot of good moves on the downside that really spiked lower on the over the weekend, and they turn around and bounce. So I've got my eye on this. We got long here, got out at 10.7, missed a lot of that move up, but it's come back down. I want to see if this starts to hold. I want to see more contraction. It's more in the longer term. If we hold above this 10.3 zone, 10,300, then I'll be looking for, here we go. If we can do this, I want to see those lows test. I want to see that tested, put a bit of a squeeze on some buyers, and then hold and go and work off a high low. All right, so that's the key. That's the idea. I want to see this sort of action, the MAs catch up, and then see if we can expand higher again. So the markets will go from, and actually in saying that, I've got some videos coming out. We're going to do 3 different videos on the 3 phases of the market. We've got contraction, consolidation, and expansion. Expansion's where we want to trade, generally. If it's in contraction, you're looking for some more of that reversion to the mean type of trading. Expansion is when you're going from the inside out. As in you're buying, you're looking for the expansion out, that leg up or that leg down, when it really starts to get that momentum push behind it. So that's what I'll talk about. So if we can get, this is expansion, we can get some sort of contraction, consolidation, hold, and an expansion again. That's what I'll be looking forward to jump on board that momentum back up again. The last few things is really just crude, and so I want to go into longer, shorter terms, time frames, and maybe the 30. Crude's looking weak to me. I mean, that big flush lower could have cleaned out a few buys in here, enough to turn around and break straight back up again. But at the moment, you've got, if countries go back into lockdown, I think supply is going to increase in crude and demand is going to decrease, especially when you got OPEC starting to push out more supply just recently, loading up on, it's just an overkill potentially, which could mean, which for me, I would expect some weakness on the downside just to squeeze out some of these buys. We've got a lot of buys built up here. You can see it's starting to roll. I mean, that roll's not a good sign for anyone that's bullish. And you've got enough buys in here, and in here that are potentially really set to get squeezed out of the action. And it's all about, to me, it's all about this 40-50 zone. If that holds up and we start to get a lower high in here, again, we're looking for that lower high to come into play, even if it's from here. Like I said before, on getting short just before, I would sort of expect this to hold maybe, and then that's what I'll be looking for maybe later tonight if I'm around, obviously watching it, but just keep an eye on that. If we can't and we start failing at a lower level, look for a short off a shoulder trade, so a lower high coming into play, and that momentum to trade down on the, well, to get short on the downside. I just spat it out. That's great. Does it make sense? So that's kind of the action. If you can get that lower high come to play, the market pressuring lower, and then start to attack this low, and then further down to these lows in here, then off this lower high, there's going to be a lot of people watching that intently, especially after this move down. If they're long and they saw that rebound quite sharply and then hold, they're looking for a punch up. And if it doesn't punch up, they're going to be thinking twice about holding long positions. All right, and that's the name of the game. It's supply demand. We've got a lot of supply of long positions at the moment that could create a short move. But if they are not willing to get out yet, where are they willing to get out, and where are we willing to get short if we see that start to break down? Whoops. So that's what we'll be looking at there. And the last thing is really copper. So copper got smashed around on that US dollar move. So if the US dollar moves down again, back up again, or continues up, expect some more pressure into copper. And that's got a load of longs built up from quite a while now, a few months. Longs have been building up, and we've been speaking about this zone for quite a while. Whether that's consolidation sideways and we're going to bounce, don't know just yet. If you're looking at that, say on a longer term time frame, just go to a 4-hourly. Then from here, if we start to get through this zone, for instance, and bounce up and hold another lower high, I think this can get a bit of a head of steam on the downside. Right, so there's when you look at it, anyone that's long, the higher you go up, the more pressure they'll be feeling. And if you're late into that trend, you're long late into that trend, you're either out or you're underwater, or you're really thinking about getting out. So if you're sort of working your way backwards, as we start to go, more pressure, it becomes more and more obvious that we're probably not going to go up. We're going to have some sort of corrective action. There's going to be more and more buyers stacked up. They're going to start to feel nervous. All right, and that's all trading is to me. It's just who's caught on the wrong side, or who's going to be forced to lock away some gains, or when you've got a rangy sort of market, it's kind of even between buyers and sellers. When you've got a market starting to feel, it's loaded one direction, like copper, for instance, and a lot of these markets, there is that potential for a squeeze. All right, so look, we'll see how that goes. All right, guys, I've been yabbering on quite a bit there, so feel free to put in some, if you've got a question, just chuck into the chat. If there's anything you want to look at, we'll get into that euro, then we'll have another look at that. We'll get into the euro a bit deeper, as in we'll go back a few charts through the daily and all that sort of stuff and key levels. We'll start from scratch just to see us build a trade, just to see why there's different levels that we see important. But anything else, like some shares that you want to put in, some stocks. Actually, just before I get onto that euro, Chalice is one that I'm not minding, a little goldy. Now, if gold does go for a run like everyone expects and starts to take off, then this one's actually not looking too bad. I like the fact that it's, you've got this gap up, and not all gaps close, don't forget. Just because you get a gap up doesn't mean we have to get back down to 60, because there's a hard and fast rule that we close gaps. Right? This could easily hold up at 1 and start to lift. We start to lift from here, And the longer it takes going sideways, the longer consolidation is sideways, the longer it holds above sort of 90 in that one level mark, then the more likelihood it's going to attack those highs at 130 and spike straight through. I think longer term it's had a bit of a spike up here. Actually, that's your monthly chart. It's consolidating up here. So at the moment, we're not 100% which way it's going to go. It's the fact that we've got, let me just go in on that. The fact that we've sort of pressured down here, you can see that the stochastics, we've come down, got to the oversold, we've been bought back up, get back to sort of oversold in here. Actually, I'll draw it back up. Let me get my little drawing tool. We've got, here we go, get rid of that. Screen snap shot. Oh, pressed the wrong button. Sorry, guys. That's a new function that I just learned. I'm not very good at. I squeeze my mouse too hard on the left-hand side and it gets discard. Let's do that. All right, that's good enough. Come on. So you've got here we go. Can you see that clear enough? It's more these levels here. You can see oversold here means pressure and selling. Once you get oversold, you just want to see what price is doing. Okay, we made a low here. Next time it's oversold, we just got through this low, which is kind of important to notice. If it was a bearish market, whoops, if it was a really bearish market, that should have gone a bit harder. You can see it's gapped up here, come back down, retest that gap, got a lower high in play, built up, went through that level, and didn't go much further than say 5 cents. It only dropped about 5 cents before we got some buyers step in. And the next time you've got this sort of press down on the stochastics, it was starting to get soaked up at a higher level, back at basically 90 cents. So you've got this bit of a flush through 90, got down to about 85, popped back up, come back down. So if that was weak and that was going to be a lower high coming to play, it should have gone through. Instead, we've got this break up there. So to me, that kind of action is quite bullish. So this is basically what I'm looking for there, is if we start to hold the dollar and we start to break up through 110, for instance, I'll just be looking for that high low to play out and get in on the long side. All right, so you know where your stop's going to be. It's going to be below that higher low, potentially 1. If you've got a 10-cent stop, would be great. But we'll just keep an eye on that. So yeah, I don't mind the look of that, just because it's holding these higher lows. I mean, especially this one here. If it goes down through 1, I'd have to be thinking twice about it. If it goes up to 110, and this is why it's important to get that high low coming into play. Say for instance, I can't really draw it, but say we get up through 110, it breaks this kind of level. You get up through that level and turns around and goes straight down below that low. There's no reason why it can't do that. Sucker in a few buyers, turn around and squeeze them back out with a push through 1, and then we could be looking at closing that gap. So there, just because it's broken up through, say, $1.10 or whatever, doesn't mean that it's going to continue, right? So that's why I like to see that's your first break up and out of this contraction. That's your first hint that we're going to get some sort of expansion. And then if you get confirmation off a higher level, even if it's a minor higher level, say a pullback to 105, 106, 107, you get this higher level and then it goes back up through, say, 110, then that's where I'll be looking to buy, because that's confirmation that you're not the only one looking at that kind of price action, that there's someone else jumping in and people are willing to jump in at a higher level. Let them do the heavy lifting. Let them get it wrong if they're going to get it wrong. You know, because those people that are going to be buying it and supporting it at a higher level are probably going to, they could be falling for this kind of move. They buy it just at a limit order and they buy, and then they get squeezed out. All right, but if they're going to support it, meaning they're willing to jump in, and any of the sellers are just calling it quits, then there's a lack of selling pressure. Buyers, and it's going from selling pressure to buying pressure. Buyers start to lift it back up, and once you get a break of that level, then it does two things. It says to sellers, get out, stay out. If you're long and you wanted to get out, just wait till it gets to a higher price, because it's quite obvious there if you've got this high low playing out off this $1, and then you've got another minor high low at 105, for instance. That says to anyone that's probably thinking about getting out, just wait, because it's going to higher prices. It's going to be a lot more obvious there. And it's also saying to buyers, if you want to jump in quick. Okay, so that's how, just going through the rigmarole of interpreting things and how they work. Now, just looking at another screen, I reckon we just got stopped out of that the Dow. That'd be a shame if we did, but anyway, it's the nature of the beast. The euro. Let's get over to the euro. And there you go, we're out. So let's forget about that now. That didn't go anywhere, didn't lose, break even trade. I'll go and cry about it when I when I get off the stream. I hate losing. I hate losing. But anyway, we've got the euro. Let's start from scratch then. Let's just build up a bit of a picture. How did I get started? I got started years ago. So my history, I think I got started through my father, who's since passed away, back in 2000. So by trade, I'm actually an engineer, qualified materials engineer. I finished uni, went overseas to Japan, and then come back, and I wasn't really interested. I thought I'd give this markets a try. Back in about 2000, 2001, I think I jumped in. That's where I started. And then went for a while as a broker. And then I think from about 2010, 11, I went and traded for myself for a while. It's just, as being a broker as such, it probably wasn't me. I like the trading side of it. The sort of sales pitch of everything. I love the trading side of it. So I jumped into trading for myself, and it started off, it was a bit tough. When I was a broker, I thought I was a legend, but I realized there's a difference between broking and, um, there's a lot of brokers out there, in my opinion, don't quite know what's happening with price action. When it's a bullish market, it's quite easy, especially if you're a stockbroker. Bullish markets are easy, just buy and forget. But when that's not trading, so once I started learning more about trading, especially indices, futures, um, that's where I started cutting my teeth with trading with respect to price action and everything that we've just been talking about. So yeah, from there, I think the last 5-6 years I've been at home trading for myself and working with TradeSetup and a guy called Davin Clark that anyone doesn't know. He's basically been my mentor the last few years. He's got a fantastic way to explain things. So really, really good trader, gun trader. Yeah, oh, Pete, there's a lot that I don't tell you about, mate. I'm I have to have stops. Basically, I mean, Davin, for instance, when he's a really good intraday trader, he'll trade the DAX a lot, SPY, dollar, Aussie dollar, all these sorts of things. The Dow, his main bread and butter was the DAX when he was trading full time. Um, and I think he used to trade the Hang Seng a bit. I love the Hang Seng. I think it's really good, especially these hours. Um, but he wouldn't trade with a stop. He would look at the levels and stuff. And obviously, there's going to be times, and he'll admit that he's got caught. But generally, he's got the discipline just to smack it. Okay, he's wrong there. He's wrong there. I just like to have a stop. It's just that comfort where if I start to second guess, I'm going to get stopped out. So it stops me from copying a real hard, a big loss. And that's the way I like them. Let's just look at something as an example. That's probably not it. Let's just look at the Hang Seng. The Hang Seng, because it can move like a rocket. Let me find my mouse again. That's not so good anymore, is it? But anyway, with a 5-minute chart, I just want to clear this out. Sorry, guys. Let me just give you a second so I can explain what I was talking about. Actually, just do this. So on the 5-minute chart, or the 1 minute, I prefer to have a stop. For instance, there's going to be times when, the market gets choppy like that. And if you go short here and you don't have a stop, for instance, I just say you've got a short on the break there. Was it 24,490? You're up a bit. You don't take your stop, and it gets all the way back up to what did I say? 490. 490, and it's at some stage it's trading back up at 600. Yeah, it's 110 points. Now, if you're trading off this 5-minute chart with that kind of those kind of swings, I mentally can't take that. I'll admit that to you. I don't like that. I would rather get stopped out, kick and scream. But in the back of my mind, I know I've been stopped out. You can reset. If you have a bad day, there's nothing worse than getting chopped out. But there's going to be times when it saves you if you don't use a stop. And it saved me a lot of times, when, say for instance, I was buying here, I was buying off this candle, I bought it there. Now, if I didn't have a stop and I saw this really take off, you've got to be disciplined and say, oh, where am I wrong? Am I wrong here? No, I'll give it some more room. Okay, I'm wrong here. And then sure enough, there's going to be a time when you don't like to take that stop and you get all the way down, okay, into support, that's it, I'm out. And then turn around and watch it bounce back up again. So just watching this on the 5 minute, actually, if this builds a lower high from here, just for anyone that's potentially thinking about trading, if it comes down and we get this kind of action, then there could be a short on the cards. But the Hang Seng closed at 2 for an hour, so they tend to chop around here. I wouldn't expect that to give that kind of trade before 2. So just keep an eye on that. So yeah, with my stops, I don't want to be sitting there trying to guess or give it too much room. It's happened in the past when I've tried not using stops. Well, I thought, okay, I'll just watch it and I'll trade it. But there's times when I go, for whatever reason, there's going to be times when you're not feeling good, you're tired, you're doing this, you're doing that. And for me, that leaves me open to those big losses on those days, to getting really carved up a lot. So I would prefer to have a hard stop in place where, look, the decision's out of my hands. If I get triggered there, then so be it. And I also just like to use stops. It makes me trade better and focus better, because I don't have the concern of getting smashed. And if I have the concern of getting smashed, then I'm not thinking straight. So I would always use hard stops and just leave it. So yeah, in the past I've tried it and it hasn't worked for me. For me, I just like to use my stops. If I want to give it more room, I'd give it a bit of room. For instance, if we did get short here, you could have just, I generally like to raise and lower my stops if I'm short, for instance. The first opportunity, once you get to close that 5 minute candle, I'm above here. Close this 5 minute candle, I'm above here. Might have got stopped out on this one, might not have, depending on where my stop is. If it's just higher enough, maybe mid this candle here, for instance here, but then I might be stopped in. I might still be holding, and then it expands back down again, then expands, and sooner or later you get stopped out. But to me, just lowering it like that, it takes the two things. It takes the worry out of it. Once you start getting in some profits and you're locking away more and more gains, it takes the worry out of it. And secondly, just that's my sort of technique for trading the Hang Seng, especially because who knows where that's going to go to. And I might be watching a 1 minute as well, just to give me a bit of a heads up, but that could expand lower and lower and lower. And I don't want to get caught if it's, say for instance, you think it's going lower and you think it's going all the way, once it gets through this support zone, like it did, it got through, closed on its low on that red candle and turn around, bounce from there. If you think it's going to go lower and you go, look, I'll give it a lot of room to move, and all of a sudden you get stopped out at break even again. So I would rather, that's my technique on the Hang Seng at least, is to lower my stop just to lock away gains and take the decisions once I've done the hard work of getting in and at the right time, because you got in at the right time, say on the short side here, for whatever reason you might have got in there, for instance, and you stop above that level and you're just watching it, and then sooner or later you've got a chance to lock in your stops all the way down, and takes out that decision of where I should get out of your hands. And there's times when I'll watch it and I'll take it off, book again. Like I think I was talking to someone. What was it? You, Jason? Might have been Jason. I'm not sure. We were talking when I traded in the Hang Seng the other day. Took a good little game, but I didn't follow it down and it went a lot further. So I was kicking myself. But there's times when you're just going to change your rules. But if you can stick to the majority of the time, stick to your rules, stick to your plan, and put that higher probability of success on your side. I diverged a bit there, didn't I? Let's get back to the the euro. What am I doing here? Let's go down to do two things. Let's get that out. Get rid of that. We'll go to start on a weekly. So the weekly here, you can see is well and truly this sort of longer term downtrend established, and I haven't looked at that for a while. Whether we're going to fail here, so there's another reason why we could be, if we back off from here, and it's a good reason for a long squeeze, sorry. Anyone that's been buying and not really, like I haven't actually even noticed this weekly chart, it's a good area where we could get a bit of a squeeze before building and going back up again and taking hold of these longer term move up. Now, longer term, it actually looks quite good. Look at that longer term strength. We've got this base. We've projected into this, 104 area, touched it a few times, and it's over a longer period of time, bounced up to, 124, come back down. This has been a bit of a grind down, and we've just bounced straight back up. So we're going from one side of the MAs to the other. Now, in a trending market, say for instance this, you tend to hold above the MAs for quite a while, and it trends, that sort of move, and it's quite clear. When you smash down and you start holding a level, bounce above the MAs, you come back below, you're back above. To me, that's more your longer term sideways action. So potentially longer term, it is building the base. Now, who was saying that? The Shibello. Longer term, yeah, I think you could be exactly right. It's where you put your risk. If you're buying this off the weekly, you buy it here, you put your risk below. That's a massive amount of risk. I'll be going dropping down and you might have a couple of nibbles at it. But if it starts to break up and starts to trade up to 125, for instance, then you know that this longer term trend is intact. It's starting to build potentially, and there's could be, over very long term, a big move up. And that's where you get that complete meltdown in the US dollar. So now we drop it down to the daily, just see what's the daily is anything different. No, nothing really different. The one thing we've got from the daily is that's holding the trend up. Now, one thing I would also look at, if that's like to do that, just to see where it's extended. Look at that. So if we clone that, this is another good technique we use it quite a lot for seeing. That's your initial leg up. You've got the pullback. That's quite clear. We started putting in a base over a couple of days, couple of weeks, and then we expanded back up again. So just look at that. There's a few things lining up for a potential short, a long squeeze. So we've got this pop up here. That's my first leg up, and I just take that, copy that, from low to high. Take it from once it starts to consolidate, you break out to a new high. Then that's your base to work from, and then you see we're expanding. So if you're looking at this, for instance, in here, and you're looking for that long, you'll see it when we drop down a chart. You'll see that little red candle break to the upside. You've got your stop below. You could look at this and go, look, there's a chance that it's going to project all the way up to 118. And if you're getting long at around 114, that's 400 pips. That there is that potential. And if you can hold that, which there's been a chance that you could, off that daily chart, then that's the usefulness of using those projections that we were talking about. Now, I have done a video on those projections, I think, a while ago. It wasn't in depth, but we'll try to do something down the track a bit more in depth on what I mean by projections. And it's a good technique to go, all right, that trend is up. We've had that pullback. You look for that. You're at least looking for that secondary move, whether it's down or up. You look for the secondary move. Look at this, for instance, down, green candle, secondary move down. It's not as clear later on. 1, 2, it's not so clear there, but that's your one move up, pullback, your secondary move. So the secondary move can often provide some really high probability, low risk setups, entries, because that's when anyone that's shorted off this high is turning around and get squeezed out, and it could really, and then anyone that's been holding a short essentially into this high has got to think twice about it once you start breaking back up and you've got this kind of price action. Right, so that's our daily. That's coming to that same zone from the weekly. So if we start drilling down to see if let's go to an hourly chart now. Just remembering that's a weekly potential resistance zone. It's potentially a zone we're going to work off. Then to me, if you want to get short, this is the level to watch, right? And if you're watching that level there and it starts to break, like I said, I'll just be working off a shoulder, and I want to see this. Wouldn't mind seeing that secondary move up and then a shoulder to play out longer term. And if we get this kind of price action, lower high than this, at 119, for instance, and you get a lower high, say it comes in somewhere around 117, 70, whatever we got here, 70, 80, 75, 80, and we get a minor shoulder off that, it's just about dropping timeframes to refine your entries, not hard and fast. There's no reason why we can't just power down from there, without that shoulder to work off short side. But that's why I like to look at the different timeframes. If I'm looking for the hourly, I might be down at the 30-minute. I might be on the 5-minute or something like that, just to refine that entry. Once you're on the right side, if it's heading south, and if everything's saying it's heading south, then you want to jump in. All right, but that's what I'd be looking for short, because of this confluence with the weekly, the daily, and all that, and potential for a squeeze of these longs. But longer term, I kind of agree. I think longer term, it's bullish. If we start to get that, we can get a short on here and start to hold up. You might make 100, 200 pips on it, But longer term, that's just your higher low to work off on the other side. Then you just flip it around and you go in the other way once you see your setup. All right, so that's the euro. Let's just get on to RE. Yeah, I think it probably did. Let's get over to, let me keep that. Don't really care about that one. RE, yeah, so I think Pete was talking about this leg up here. Consolidate, hold the inside level, and that leg up there. Let's see how close we got. So that's why it's probably similar with, people talk Fibonacci's, all the other stuff. There's all that Fibonacci's. I can't remember the other one. GAN, they're all sort of based around a similar premise. I like to call it projections. That's all. Oh, it's not going to work on this, is it? All right, so we just have to figure 180 up to around, say, 290. What's that? $1.10. $1.10 from roughly 220 takes us to 330, 335. It's about here, so it's about that high. So, yeah, that pretty much an equal leg up. That's your first leg up. First pullback, we consolidate. It's quite clear. Good pullback. Take out that. That's an anchor to that trend up. Took that out. Didn't go very far. Popped up. We had to have a deeper retracement to here to see if we can break down back down to these lows. Instead, retested that low, held, and up we go again, starting to. And I think that our long was somewhere around here once you start getting this high low hold up. All right, and it projected all the way up to 330. Whether that continues on, who knows? Yeah, that worked out quite nicely. What was the other one? Linus, you want to take a look at? All right, probably just finish it on Linus, guys. We'll have a bit of a look at this and see how we go. Kick away from that. Let's just go down to the weekly. So the weekly's not showing me too much because you've had a move up. Let's just do something there. So you've had this rally up here to around $3. It's pulled back, a rally and pushed through $3, and then fail straight away off the next week. And then come back and retested that zone. You can see just in here. Oh, it's not working. Got a fancy keyboard which doesn't work. There you go. That lower high has failed, and that's basically off the $3 level, which is this previous high. So we flushed out that, retested and failed. Anyone that's been going long has to think twice. Then you got lower highs coming in and pressuring the market down. Now, there's one thing I don't like the fact. I mean, that could have been that move down through this low at around $1.50. I'll draw that up actually. You could view that two ways because we've had that big sell-off. Things tend to get a bit stretched, whether it's up or down. When it's fear driving the market, they can really get extended. They can go through levels you wouldn't expect. That makes sense. So the fact that it's gone through that level and bounced back quite hard, maybe this is what's in play now. All right, if that's in play, on that weekly, it's looking quite good. There could have been an entry on the weekly, but then your stops has to have been around 180. With a breakthrough 220, you're up 10 cents at the moment. You've got a massive stop of 40 cents, which is, what's that? It's 25%, I think. So mass is roughly right. Yeah, it's about 20 to 25% stop. If you were buying that stop, will you stop? Buying above 220 when it breaks through 220, breaks through this previous high just in here. That's the high we're talking about there. Breaks through that high just here. You got long, your stop's just there, and then see what happens. Then you've got to be looking up to the sort of that 320 mark to see how it goes. We just drop it down now. I mean, it doesn't mean we have to have entered there. It means that's your first sort of pop up, because to me, this high low, it hadn't broken that trend just yet. I mean, it is showing some good signs, and the fact that this big flush out lower is probably off the cards. So you probably say that was the support it should have held. We've pushed straight through a big flush out of any longs, straight back up again, and we're starting to trend up again. So if we go into the daily, I'll do that. We'll do it properly. There we go. Daily, there we go. I would like to just see if it can hold here, because if that weekly is going to be correct, just say that issue projection, that from low to high, you're probably getting somewhere up to $3. Is that about right? $1 up to say 2, and $1 to $1.80, say to 280, 290. It takes you back up to those previous highs. So yeah, if that's the case, and everything's working out okay, I want to see a bit more work done. I wouldn't buy it just from this green candle, but if we can chop around, essentially, just say this is the daily chart, that's our one leg up. Let's just do that in a different color. That's your first, that's not even what I want. Let's do that. All right, that's your one leg up, and we're looking to project that secondary leg up to around the $3 mark. All right, so that's off the weekly, what we're looking for. So what we would be looking for on the daily, just remember we've got this kind of price action. All right, we've got that pop up, which is just all part of this last leg. I wouldn't mind seeing if we can hold here. I want to see some work done and then see if we can hold a higher low. So what, in essence, when it chops around there, that holds above, what is it, 220. I really should draw that on the weekly chart, shouldn't I? On the daily. So we've got this leg up here, this pullback. If we can hold, and it's about where we are there, around 220. If we can hold above that zone, you're busted through 220, and we can sort of pull back and we start to hold that level. Sooner or later, there's going to be a setup where you can minimize your risk quite a lot. You know, if it blasts straight up and through that high, I don't want to get long. Again, you got quite a large stop, you know, through 250, stop below 220. That's where it basically has to be. I mean, for me anyway, I like to have my stops where I'm going to be proven wrong. And if you have your stops somewhere, you know, you got that break at 250, for instance, up here, you get stopped in there and you've got a 20-cent stop. It puts you somewhere in the middle, can easily go up, stop you out, hold the trend and go again. All right, that's why you've got to hold it below a key level where if it does break it, you are proven wrong and you're being forced out. So if you can do something like this, consolidate, show there's some, you're not the only buyer looking to get in, and you start to show some price action where you got some minor lower highs and it shows you a setup, then you can minimize your risk. You're projecting a break through that high, you're getting in early, it's buying in the unknown, starts to rally. If it does fail off 250, you might be up slightly 10 cents or so, and you're not going to take a hit on it. Does that make sense? So that's ideally what I'll be looking at Linus, but that's all based on this 1-2 move, and this level holding. So yeah, there's some potential in that, Pete. Good job, mate. All right, I'll call it a day there, guys. We'll finish up. Any questions you might have, give us a yell. Send an email to support@tradesetup.com.au. Now, if you're new, anything's new, just feel free to subscribe to us on YouTube. Much appreciated, and leave us a like. That always helps the cause and helps us spread the word. So yeah, take a look at our website if you haven't already. I've got to do a few updates, and I know I say that, but I will do them. And then just look out for, we're going to try and get a video out this afternoon. So if you subscribe through the website just to the mail outs, you'll get the videos as well. They'll be up on YouTube. There'll be some other stuff that we send out that doesn't go up to YouTube, some other bits and pieces. So if you subscribe to that, you get basically both. So yeah, thanks very much for joining me, guy. Enjoy your day, and we'll be back in hopefully tomorrow at 9:40. I'll be having the kids soon, so they're off today. They finished today, and they're at home tomorrow with a, what do you call it, a day off school, and then they're back into home learning on Wednesday. So you might hear some little kids running around screaming in the background if I can't control them. But anyway, we'll see how that goes. Thanks for joining me, guys. We'll speak to you hopefully tomorrow at 9:40. See ya. Have a good day. Bye.